Let's talk about another stock which has been buzzing around. It's Godrej Consumer Products. The company's September quarter numbers, they were largely in line with expectations. This is something that, the street was anticipating given the second quarter update that the company had given. But that itself was better than what the peers had reported, especially in light of what HUL had reported. Absolutely flat performance here, a 3% volume growth the street liked. Apart from that, the company has gone ahead and made a small acquisition. And more importantly, the management commentary also for the second half positive. But to delve more into those numbers, we do have with us the CFO, Aasif Malbari, joining in. Thanks a lot, Aasif, for joining in. The quarter that has gone by, let's talk about now the GST-related disruptions. Have they ended? And what's the kind of restocking demand that you saw in the quarter so far? And on the back of that, what's the outlook that you can give for H2?
Yes, I think you're right, Mangalam. The GST impact was basically a transitionary impact on trade. And we did see that in Q2, but we are seeing actually the benefit of some of the trade upstocking coming back in Q3. So to that extent, I can say that the transitionary impact is behind us. The reduction in GST rates in soaps category is definitely a positive for us. It is going to result in better demand environment. And in the medium term, this should be kind of positive. We're seeing a normal festive kind of impact in terms of secondaries. So we've kind of guided the street that we should be on track to deliver high single-digit volume growth for the year in India, which is what we had guided in the beginning of the year.
All right, just to clarify that, Aasif, you're targeting high single-digit volumes in India for the second half or for the full year?
We are. So I think some of the losses which we saw in Q2 onto a volume because of transition impact should get made up in Q3 and Q4.
All right. Okay. So the second half plus the full year, you should do high single-digit volume growth. And what about the margins? India business margins, when do they go back above that 24% normative range that you spoke about earlier?
No, so we're quite confident that from Q3 onwards, we should be able to get into the normative margin range. We also had guided the street that we should be able to deliver double-digit EBITDA for India business and for the consolidated business. As things stack up now, we're quite confident that in two of our biggest clusters, which is India and Africa, we should be in line with the guidance. We will be able to kind of stay on our guidance of delivering double-digit EBITDA in India and in Africa. And margins will kind of come back from Q3 onwards in the normative range.
Let's turn our attention to Indonesia then. How long before Indonesia returns to the growth path?
So we have fortunately held on to the volume trajectory. We have grown in low single digit in volume terms. The revenue and profits did get impacted because of competitive action and also because of some of the costs which we were incurring. We've passed it on to the dealers to incur, so that's had an impact on the revenue. We do feel that it'll take a few more months for Indonesia to kind of get into top line and bottom line growth. But structurally, the business is strong. We're gaining on volume and we're strengthening the market shares.
All right. What about the growth and scale plan for Muuchstac, the one that you've acquired for about 450 crores to be paid over 2 tranches? What's the delta here? What's your expectation from this business? And how big do you expect it to be from here on?
So firstly, it's a great product. It is the #2 brand online for men's face wash. It's a very focused men's face wash play. It's a category which is aligned to soaps, and hence it is extremely strategic for GCPL from that perspective. So we are quite excited with the potential of GCPL using its GTM to kind of expand reach for this business. And hence, to that extent, the ability to scale this seems to be quite high.
Right. Ability to scale is quite high. So, the GTM difference between yours and theirs is also a lot, right? So, could you quantify that? How much could the revenue be in the next 3 to 4 years?
Mangalam, we do see this business becoming close to anything between 4 to 5 times in terms of size. So we do see a drastic kind of scale up of the business over the next, say, a band of 3 to 5 years.
But what are the current EBITDA margins for this business?
So definitely should be margin accretive. We definitely will ensure that this business will if nothing else, be at the same levels of EBITDA which GCPL has after significant investments being made in ATL. Because as we start scaling this brand into GT, etc., there could be scale up of ATL spends which we may do. But again, it's a unique business because a large part of the B2C businesses are currently not profitable, and this is a profitable business which we are acquiring.
Aasif, what's the update on pet care? How long before the national launch?
We're in the test market, so we've launched it in Tamil Nadu, as you are aware. It's kind of meeting action standards. We are gaining sequential volumes every month. So yeah, we are on track to kind of expand the footprint in a couple of quarters.
All right, in a couple of quarters is where you will go for national launch out there. What about the further diversification plan that you have? Because, ever since the new management has taken over, you've entered a lot of new categories, which include the likes of now toilet cleaner, they have the fabric wash, etc. So do you have a sense on, what kind of revenue mix would the company have over the next, say, 3 to 5 years?
No, thanks for the question. It's an interesting one. We do have a strategy which we call as the 2040 strategy as to where do we want to see GCPL at. I wouldn't be able to kind of give a guidance in terms of a number, but definitely TAM expansion is a significant part of that strategy. Given some high growth categories where we do believe we have a right to win, and we're kind of doing that in a staggered manner in terms of entering these categories. As you mentioned that in the last quarter, we made entry in terms of the toilet cleaners market. We've launched Godrej Pick, which is a very unique formulation, which is a stain block formulation, which allows for 5 days stains to be blocked after usage, and hence a great product. We do see a higher growth coming in from some of these new age categories compared to a few categories where the penetration levels are extremely high. So you will see a shift between categories spanning out as some of these new categories start reaching a higher inflection point, which should happen in a couple of years from now.
Well, Aasif, how long before volumes go to double digits?
I think the demand conditions have been, I would say, in various parts, there was a bit of consumption stress earlier in rural. Things are looking better as we speak now. With GST, there is likely to be a consumption boost. So I think if demand conditions improve and some of our new plays become into slightly more larger to kind of contribute, we should kind of get back into our North Star, which is double-digit volume growth in India. At this year, we've guided ourselves on high single-digit volume growth, and we're quite confident that we should be able to get there.
All right, confident of high single-digit volume this year, and if demand sustains, then maybe a North Star of double-digit volume in the next year itself. Wish you good luck. The street likes your numbers. More importantly, they like the outlook that you've given, Aasif. And the onus is now on the second half for margin expansion and volume growth as well. With that...